What's up, everyone? It's Scotty with MoneyVest. So let's talk a little bit about Tesla. They are going to be reporting earnings next week on July 23rd. So that's when they are expected to report their numbers for the second quarter fiscal year 2024. So again, Tuesday, July 23rd, after the markets close is when they are going to be reporting their numbers. Of course, Tesla was down over 4% on Friday, and last week Tesla was down a little bit over 3.6%. after having a very flat week prior to that. So in this video, I'm going to break down the expectation from what the markets are expecting, as well as Tesla and Elon Musk confirming that they have indeed moved their robotaxi day from August all the way to October, and some other updates that I think are going to be super important as we go into next week with Tesla's very important numbers coming out. So as always, if you enjoy this video, find it helpful, make sure that you drop a like, and also don't forget to subscribe to the channel if you're just joining us for the first time. And also do check out the links going to be down below if you want to join our MoneyVest community and of course get access to this entire platform. And we're going to be adding a lot more features, a lot more tools over time. So again, we're going to be using our platform today to analyze a few of the things related to Tesla, trading now down to under $240 per share. So it was down a little bit over 4% on Friday. So there is a 51% discount that's available until the end of this month. And again, we'll love to have you on board and you can take advantage of that while it's still here. And again, access a lot of other features that are going to be coming out very soon. So first things first, Musk finally confirms that Tesla Robotaxi is indeed delaying its event. So requested what I think is an important design change to the front, and extra time allows us to show off a few other things as well. So this right here was the tweet from Warren Retlick, one of the Twitter users, and to which Elon Musk essentially responded saying exactly that we need more time, and it allows us to show off a few other things and to make some important design changes. And that was again about as confirmed as you can get from Elon Musk and Tesla that we are indeed moving our robotaxi day all the way to October. But as a long-term investor, as I mentioned before, this is not a big issue because sooner or later we are going to get to that day and we are going to learn more about Tesla's robotaxi functionality and everything that Tesla's capable of, and of course the vision for the long term with respect to robotaxis and autonomous driving, because this is a huge market. As we have already discussed from our previous videos, I've broken down the Cathie Wood and ARK Invest paper and research on robotaxis. They see this market in the trillions of dollars, and Tesla kind of leading the way. But as I mentioned before in my previous videos, Tesla desperately needs two things. It needs widespread adoption for robotaxis and autonomous driving, and it needs a significant amount of internal execution, because without execution, any plan is worthless. If I make a plan and I don't execute on it, it's just as good as me not having a plan, right? So if Tesla's got a plan in place and they've got a vision for it, they need both adoption and execution in order to be successful long term, as I mentioned in my previous videos. Now, Tesla primed to conquer strong demand with Giga Shanghai output. This was Barclays' report just recently. So Tesla is primed to conquer what Barclays believes is an indication of a stronger demand of vehicles coming from its Shanghai production plant in China. After it was revealed earlier this week, the facility was running at full capacity. And now that Tesla is through the first half of the year, the company may be preparing to handle what could be a higher demand based on the fact that the factory is running at what Chinese media said was full capacity. And analysts at Barclays believe that the increased production capacity points to higher demand as long as inventory levels are low. And that's one of the reasons why we have built this entire platform for all of us, is to start visualizing a lot of the fundamental data. You can come over here, do analysis for over 17,500 US stocks that are listed on US exchanges, and we're going to also be adding over ETFs over time. So you can take a look at exchange traded funds as well. But if you come over to the balance sheet, if you come over to, let's say, the quarterly data over here, go back last 12 quarters, you can come over here, look at inventory levels for Tesla, and they have of course been increasing a little bit. So we have seen inventories somewhat increase. So we really want this number to come down as sell-through rates continue to increase, and we're seeing more and more deliveries for Tesla vehicles, and demand continues to be a little bit on the higher end. But of course, as of the first quarter, we had over $16 billion worth of inventory, which in my opinion, this quarterly number is going to go down when Tesla reports next week, because Tesla did deliver more vehicles than it produced in the second quarter. So this report, again, out of Austin, Texas on July 2nd, Tesla delivered over 443, almost 444,000 deliveries, whereas it only produced 410,000 vehicles. So that again is almost a 34,000 vehicles more that it delivered compared to the amount that it produced. So in my opinion, that inventory levels are going to start to come down in as of the most recent quarter for the company. Now, inventory levels coming down are also going to be on the fact that, yes, the demand was good. Tesla did deliver pretty strong numbers in terms of its deliveries for vehicles, but at what cost, right? At what risk to the company, what risk to the margins did they deliver that? And I think that's really going to be the front and center focus for most investors, is how well did the margins do for Tesla, because they have obviously been coming down. So if you come over to, let's say, the last 7 years for Tesla's analysis here, and then if you take a look at gross margins or operating margins, you'll notice that we have seen a decline in Tesla's margins because of cost pressures and price cuts. Tesla is not making as much money on a per car basis as it used to, and that's again one of the biggest challenges as investors are facing, because that obviously affects the bottom line for the company as well. So analysts at Barclays believe that increased production capacity points to higher demand as long as inventory levels are low. In a recent note, and the firm stated that the production levels in China indicate stronger growth or stronger demand, which would see Tesla potentially reach higher delivery levels in the second half of 2024. That's exactly what many people are expecting, after the first half being reported at over 830,000 deliveries, putting at pace for just over 1.6 million vehicles for 2024. And that would, of course, be a bit of a decline compared to 2023, when Tesla delivered over 1.81 million vehicles. And of course, we already know that Tesla is in a middle of a couple growth cycles, which they have mentioned before, as they're working on the next gen platform, and that could bring notably lower growth rate in 2024. And they said, and I quote, "Our company is currently in between two major growth waves. The first one began with the global expansion of the Model 3Y platform, and the next one, which we believe will be initiated by the global expansion of the next-gen vehicle platform. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next-generation vehicle at Gigafactory Texas as well." So those are going to be, again, some of the things that we have to consider, that Tesla may report numbers that are obviously going to be a bit of a decline compared to the same time last year. So if you come over to the platform, come over to fundamental analysis and then analyst estimates, going into next week here for the quarterly numbers that we are expected to get from Tesla, the EPS expectations are going to be at around 62 cents. So that is going to be that number, and that still is going to represent some modest, actually that's going to be a bit of a decline on a year-over-year basis. And then for revenue, we're looking at just shy of $25 billion for the company. So as you can see, the quarter ending on June 30th, that's the second quarter for Tesla, $24.8 billion in revenue. That's the expectations from over 34 analysts that are watching the stock here, and 36 analysts looking for the earnings per share at 62 cents per share for the company as well. Now coming over to Tesla's earnings here, let's take a look at what TradingView has for us. We've got 61 cents on earnings per share and just over $24.3 billion in revenue, and that's kind of aligned with what we have, a little bit higher on the revenue side of 24.8 billion versus, again, EPS at 62 cents per share. Now, in my opinion, if the earnings per share come in lower than what the analysts are expecting, wouldn't be surprised if Tesla stock does take a beating on that day, especially if the margins are lower. So if we continue to see margins decline for Tesla, as we've already seen. So if you come over to Tesla's, let's just go over to Tesla earnings, and if you go over to the actual website for Tesla's investor relations, you'll notice the gross margins and the operating margins, unfortunately, have been coming down. So this right here is going to be that shareholder deck. And if you scroll down a little bit, you'll notice that operating margins over here have come down from 11.4 to 9.6 to 7.6 to 8.2 to then 5.5% as of the most recent quarter, first quarter 2024. And total GAAP gross margins have also come down from 19.3% down to 17.4%. So we have seen, again, 2 percentage point decrease, but more importantly, operating margins have really come down to some pretty concerning levels, because if we start seeing Tesla become a loss-making company, trust me, believe it or not, there's going to be a massive exodus from the stock itself, because most institutional investors are not going to be interested in investing in a company that's not generating any cash flows or profitability. So I think it's really important that Tesla looks at the financial statements and understands that, okay, after a certain point, we can't really cut prices. We just cannot afford to cut prices anymore because now we'll be generating a loss. So we don't really want that. So 5.5% is probably, in my opinion, the floor. If I see a number that's going to be hitting below this 5.5% floor here, I would be seriously concerned about long-term potential here for Tesla, considering the vehicles are now getting sold at a huge loss. So that's a very, very important piece that I wanted to discuss. But from a technical standpoint, this right here was the entire technicals which we had identified in our previous videos, where I mentioned that Tesla is going to continue to struggle to break out over 260, so 270 to as much as $290 to $300 per share. Massive area of supply for Tesla. We continue to struggle at that level, not once, twice, 3 times. We're just constantly getting rejected, and the support level is going to stay put all the way down to inside this green rectangle in the 180s, of course, although I don't expect Tesla to trade back down to that level. However, we do have some reasonable support in the 230s. And that's exactly where I believe Tesla is going to stabilize a little bit. That's where it was after the news broke out that Tesla is delaying its robotaxi day. It sold off. And then, of course, after that day, which was Friday, last Friday, it opened significantly lower and then got bought up intraday and then traded back up to as much as 265. And then over the course of last week here, we continue to see that momentum lower. So that $233 is going to be that first area of support for Tesla, all the way down to inside this green rectangle in the low 200s for this company. And I hope you all are ready for the earnings next week. And Tesla is one of the only Magnificent 7 companies that is expected to report a decline on both earnings and revenue on a year-over-year basis. So, hope you all are ready. Make sure that you drop a like and, of course, subscribe to the channel. And don't forget, we've got our own MoneyVest platform if you want to access. Of course, do your full fundamental analysis on individual stocks, visualize a lot of data points, and, of course, look at a lot of amazing, really interesting data that's going to help you make better, more informed, confident investment decisions. So, link's going to be down below. There's a 51% discount that's available until the end of this month. So, I'd love to have you on board. And as always, happy investing. I'll see you all in the next video.